Okay, here's a trade that I've placed today on the US dollar Japanese yen pair, and I'm going to take you through how I come to decide whether I wanted to, deal in this little market here. So I'm going to go to the daily time frame and do a little bit of a pre-analysis for you of how I decided that I was going to do this. So daily time frame, I draw a red line where we're sort of seeing 4 candles bounce off, and we're going to go back in time to see when was the last time the price was this low. And as we can see, October 2017 there, yeah. And the price goes up strongly from there, which means there's huge buying interest at that level. October 2017, in that quarter, everybody wanted to buy this. Okay, now there might have been some news that said, economically, the pound is expected to do really well over this period of time. It could be like, interest rate, something to do with the economy in that country, jobless figures or non-farm payrolls, or just something which spikes the market for the US dollar. Some good news for them. Okay, or it could just be equally bad news for the Japanese yen. And there you see the price increase, and obviously when it gets to the top level it goes down, and this is over a period of a couple of years here, now in 2018, and we've seen the price go down quite considerably. Okay, and then I'll take a screenshot here so I can. Okay, so let's have a look at this little window here. We've got a support here. The price jumps off this line a couple of times, okay, and resistance is up there. A couple of touches on that line there. Now this is a daily, so this is a really, really long period of time. We're not too interested in trading on the daily. We're just looking at this so we can, get a better picture of what is going on with this currency pair. The next step, once we've kind of put our support and resistance lines in, we're going to look at what the price is doing. So we've seen pull back there. It's gone down, okay. Now that would have been a resistance and it's breached it, okay. It's gone above that, but there it did not touch that line again. Now because it didn't do that and it came down again, but it did that last time, people might now be thinking, oh, it's a sell. People start to get fearful. People start to think, oh, this is now a sell, it's going to go down now. This is the technical way of looking at it. In the background, what we haven't looked at is the financial calendar. There could be some news on there which sort of smart that to go down, but we're literally just trading based on the price action, so we don't need to know all those things. It's good to look in the morning at the financial calendar to see if there's anything that could upset your trades that day, such as, is there a piece of news coming out that the interest rates in that country are going to rise or fall, or the inflation and the jobless figures, anything which is big, which is going to come out that day will, it might not do anything major, but it will create some noise. What we see then is a little pullback here, and then the buyers come back in, but they didn't get up to this level here. They didn't quite reach there, and then obviously went back down again, up. It didn't quite reach there. More people are starting to believe that it's a sell. Big crash, breached that level there. There's a seller who started it all, crash. Now this is a bit of a range. This is where there's a lot of supply. Yeah. Now it's gone down quite far. It's reached this level here. Because it's reached that level before, people will start to get fearful around this area, and you'll see a little money spot. That's where the price goes up and down and up and down. Now lots of things are happening in that region, but we know that the sellers eventually won because the price continued to go down. Then it got to this level here, this established support line. Buyers entered there because they thought, oh, well, it's done it before, so it's going to do it again. And the buyers got to here. Okay, but if we look at this point here to that point there, it came in about 70%. That doesn't mean the buyers have took back control of the market. Sellers again did not think that the buyers have come back in, so it went down a little bit more fee here. Big crash, and then the price plays around for a little bit quite recently. It's 2018. So now we know it's a strong seller's market. But as we get to recently, instead of these big drops and these little tiny ranges, we're now seeing these big retracements. So round this area, we're getting to see some demand for this currency again. Now, the momentum that we saw here is slowing down. Buyers are starting to take up these prices, and we're seeing a lot of oscillation off this line here. Yeah, it's creating some lower lows, but it's creating some lower highs, but it's not creating any lower lows. So we're seeing a reaction from this all-time two-year low. Okay, so that's kind of a bit of pre-analysis. Now, we don't trade off this. We do the look-in, and we understand what the bigger picture and what the market is doing, because in the daily it's got a lot of strength, and what you see in the daily is kind of over a long period of time, and not there have to be a lot of stuff go wrong for that to change. All right, so let's go to the market. Okay, so we're still in the daily time frame, and we bought right down here. And if we go to the 5 minute, we can kind of zoom in on what's going on. So I watched so here's that line which represents that 2-year low. Okay, now there we saw it react from it. We can kind of see it react from here a little bit higher. Went up, and I bet a lot of people thought at that point there that the price was gonna go up again. Now the problem is with these points here, everybody wants to go with the crowd at these points, and in forex there has to be a seller for every buyer and a buyer for every seller for the price to move. Now there are currency is actually changing hands here, and it can't do that unless there's a buyer and a seller to match to complete the transaction. And obviously when it gets to such low levels, everybody wants to buy. The demand is so high, and that pushes the price up. And the problem is for the banks is if there are too many buyers, then the price that they want to buy it at is going to suffer something called slippage. And when the bank's here to make the money, not you guys. You guys are supposed to lose money. This is the dark side of trading. Like, you see a lot of adverts saying, oh, trade Bitcoin, trade currency, get into this sort of thing, and I'm obviously guilty because I'm encouraging people that they should get into it as well. Obviously why I'm teaching it, and I quite like when people get into it. But you are providing money and liquidity for the banks and doing this. You're most likely going to lose your money. If you become quite successful at it, you'll be trading like the banks. What's happening here is something called a stop hunt. Now, a lot of people might disagree with what I say, but this is just my strategy. I tend to trade these quite a lot because I know at these points here what the crowd is going to be thinking. The crowd is going to the crowd is going to think it's going to go off at that point. It's done it twice before already. Why wouldn't it go up there again? It's quite a strong level, but they'd be wrong. And a lot of trading videos teach people that when they place a trade, they should keep a stop loss maybe 10 to 20 pips below. There's a lot of people teach 10 or 20 pips. Always stick to that kind of level there. Now, I'll tell you what a stop loss is. If you've put a buy order just there and you say to the computer, I want to set a stop loss just here, that's just a better way of saying, if I buy here and it doesn't go my way, I'd like to sell them there and just cut my losses. So that's a sell order. Yeah. So if everybody's buying there and there's lots of sell orders, then there's going to be a lot of clusters of liquidity down here. That's people who are going to be wanting to sell their buy positions in a forced way. Basically, as soon as that red candle goes below it, that's it. They've lost the money. And I know if you to count all these blue dots down here, there could be close to about £5 billion, let's say. We don't know this, we don't have access to that information, but £5 billion, let's say, of liquidity. Okay, now that might be attractive to the banks, because let's look at it from their point of view. Let's pretend that I'm a banker sat in Barclays Bank, and all my clients, I've got 30 billion. I've got 30 billions. I've woke up on Monday morning, I've got all my emails, and they're saying people want to buy 30 billion at this price here. This price here, this all-time 2-year low. So this is like a good price to buy. Okay, so 30 billion, why don't I just buy 30 billions worth of currency then? Well, there's only a 5 billions worth of liquidity, so I can only really buy what there is available on the market. If I put more orders in, the price is going to suffer something called slippage, and that's where there's too much demand and there's not enough sellers to meet that demand. So it becomes in their favour. They can kind of ask, whatever price they want, and there will be someone to buy it because there's huge demand for it. It's kind of how it works. So in order to transact the whole, let's say 30 billion, they need more than 5. Okay, there's 5 in stop losses, but they need the people who wanted to buy here to change their mind and become sellers. And as soon as they've had their position stopped out, clean this up a bit. As soon as they've been stopped out, they might actually now change their mind and sort of, okay, I want to become a seller. So those sellers provide maybe another 5 billion. But they're not stop loss sellers now. They're people actually thinking, yeah, this is a sell now, so I'm going to put my sell orders in. I'm going to sell everything I've got to you, and that will create over 5 billion. Because when new traders first get into this, they chase the market, and if there's a red candle, they want to sell, and if there's a green candle, they want to buy, and they kind of just chase things around a bit, and they're all over the place, and they don't know what they're doing, and they just want to make money. They're not really too fussed about, how they're going to do it. There's no strategy. They just want to do it. So this point here, we've cancelled out the stop losses, so we'll delete that. The banks have got 5 billion. We've got 25 left, yeah? Okay, so once those sellers have decided that they're now actively going to sell, and it's provided another 5 billion for the bank. The price might get to there, and the banks will buy it back up again. Yeah. So now they've got 20 billion left. Now, that buying that the banks have just done is represented in these two candles here. So the banks have bought it and the price has gone up. So they've bought all those positions out and they've done, about 10% of the way there. Okay. Now, if you are experienced in price action, you'll know that markets do this a lot. And these pullbacks are where you want to sell. Now, if you didn't have any of this information here and that's all you saw, you might think that this market is like that. That is going to create more sell orders here. Yeah, so more sell orders here. And as a result, the price is going to go down. Now the banks like this because now that many people are now looking at this as this type of thing. That's provided maybe another 5 billion in liquidity. Could be 10, let's speed things up a bit and call it 10. So now they've got 10 left. Now, because obviously now they might have got a little bit more confidence in the market, they might have, got rid of a higher amount of money. They've bought 10 billion now, and that has resulted in this upward move here. Now, because this level has been breached, people might now start to think that this is again a buy. So we're going to get like loads of people, buying off this line. Now that we don't know what's going to happen next, but it looks to me as if in this stop hunt, the banks have finished transacting and now they've bought a lot. There's not many sellers anymore because they're also buying as well. And we'll sort of see this spike going up like that. As soon as it gets to this point here, I predict it'll bounce off there. Yeah, and maybe go down for a bit as well. Who knows, it might even go lower. But it does, if you look back in time, it could go a lot lower than that. But this is kind of how the market plays out. And the reason why I placed this trade was delete everything, clean up it a bit. The reason why I placed the trade here, okay, not anywhere else, is because of this candle right there. You see this long wick? Now I'll tell you a little bit about candlesticks. That's the open, and that's the close. That's, if it were on the 5 minute, this whole candle represents 5 minutes, so that represents 5 minutes, that represents 5 minutes. And in that period, it got to this level, so that's the high for 5 minutes. If we went to the daily, that would be the high for 1 day. That's the low. Now you could just look at this and take it at face value, but what it tells me is that this wick is where sellers came in, or buyers came in. So right down here, it's where, if the price is going low, buyers were interested in this price here. They pushed the price back up again. Likewise, if the candle was going up and up and up and up and up, that would have been a green candle in the 5 minutes. You sometimes see candles are green and then they'll just flicker from red to green. So we've got that high. And the sellers decided, right, yeah, it's a good price for me to sell right there, yeah. And this body of the candle is the actual price of where it opened and closed. So if we take that example, for a green candle, it's vice versa. Green candle's gone up and up and up and up and up. Sellers came here, pushed the price down to here, and that tells me that whatever this price is up here is an attractive place for people to start selling at. Okay, and then you can kind of look on YouTube to educate yourself more about candles, but you know, you get different type of ones. You can get really big wicks on them, and a green candle down here, that's maybe a good sign that, you know, it's a weak buy. The next candle will probably be red. Yeah, because this candle here finished in the lower half. Let's call that the halfway point. The candle, it finished right down here, which means the buy wasn't very strong. And likewise, if it's a sell candle. Okay. Right, so I was looking at these candles and I saw, obviously the big seller starts here. Sell, sell, little buy, sell, buy, sell, big sell, another big sell. A little bit of fear came in here, so the market, people maybe thought, oh, this is the point at which it's going to go up. They were wrong, it went down again. Okay. No fear here, people did not believe that the market was going to go up at any point here, so it went down again. Okay. Now, in this period here, we saw the price go all the way down here, but buyers knocked it back up again. Yeah. The next candle, we saw the price go all the way down to here, buyers knocked it back up again. Now that's huge. When I see a candle like a red candle with a huge wick on, that means buyers were so strong that they pushed the price up, let's say, let's call that 10,527, and now it's at 10,535. That's 6 pips in 5 minutes. It's a lot. That gave me a good indication that the market had seen its support down here. The next candle, I would say, would be good odds that it would be green. So that's why I entered the trade just here. What goes on from here, just to explain why I didn't panic and close my trade and still left it on, is because a lot of people will be thinking of this as a, so it's going to do that. It's going to do this until the banks have done what they need to do. So let's have a look at the live charts to see where this trade's at now. Okay, so we are £187 in profit. Now, I can see that we're getting sellers, just like I explained earlier, people thinking that this is now a sell into here. Yeah? There's a chance that that could actually break past that. Lots of sell orders there. The banks will buy all those right back up, and that buy will create another upward movement. It's just the way it works. It's just how things go. But I'm not trading like the whole crowd here. I'm thinking like how a banker would think, because everybody's thinking that it's a sell here. Or the people who did buy down here might actually think, you know, that amount of money, I'm happy with that for a day. You know, let's count these candles here. So 5, 10, 15, 20, 25, 30, 35, 40, 45, 50, 55, 60, 65 minutes, £179 for 65 minutes. A lot of people will be thinking, okay, I'm going to take profit at that, and then they'll sell. So if this is a buy, which I've done here, if I was to close my position, I'd be selling what I've just bought, so that'd be a sell order. So if a lot of people are doing that, you'll see a bounce back, yeah? And then all those people might not necessarily mean the whole volume of the market. So, you know, it might only get down to here before people think, okay, it's going up, it's gone that far, you know, it's not going to, I don't think it's going to crash all the way down to here. So I think this is as far as it's going to go. Like, you know, you might get your Fibonacci retracement tool out and that might say 61% or whatever it is. I'm not a big fan of Fibonacci. I don't quite know how to use it properly yet, but it's likely that it's going to go up from there. So you'll see a lot of buyers from there. And then, because it's now an upward trend, every time it goes to a pullback, you'll see pullback buyers come in there and the price will go up. But we just don't know what it's going to do. So I am going to go back to my live charts again. That red candle there went right up to there. Sellers brought it back down again. We're in a little bit of a range. Now this is where fear, or people were starting to think that it's now becoming a sell. So if I take my stop loss, lock in £100. This is why I do free lessons, because the whole time I've been explaining this to you, you know, £100. It's alright for an hour. An hour of my time, £100 an hour. Let's watch that go. Now, this is another little lesson in sort of risk and trade management. I didn't put a stop loss on. I do encourage you all to use stop losses, but the reason why I didn't is because the price fluctuates so much. A lot of money is lost when it stops you out. Now I'm really confident the odds are sort of saying, you know, it's going to go up from there. I didn't put a stop loss in. I didn't want to be stopped out, because I would have been stopped out. Let me show you. I would have been stopped out here if I'd have done what everybody said, wouldn't I? Because this candle's gone below it. So, you know, if I'd have put that there at the 20 pips that people say, or whatever it is, I'm gonna get stopped out. I'll lose money, and then I'll look back at it later, and then it would have gone up, and I'll be pissed off. Yeah. So I like to wait and watch the market for at least, you know, half an hour, 45 minutes into my trade. And I'll wait. And I'll wait until it's in profit. And I'll move my stop loss up. So I'll move my stop loss to 100. And that locks in £100. Yeah, so it might say, you know, I'm winning 150. But I'm not looking at that. I'm looking at what my stop loss says, £100. You know, I'm happy that if it goes down from here, I'm going to be £100 in profit. But if it goes up, I'm still going to be in the game, still going to be making money. And then I'll look at it later and I'll move my stop loss up to even further. So, you know, if it goes up like that, I'll move this stop loss up to here. That'll be 150. As it goes on, I'll keep moving it up. I don't want people to close their trades as soon as they've got the amount of money that they're in. I know it's tempting, and everyone's different, and their threshold for risk is different, and you know, only you know how much money you want to make in a day. So when you're happy, if you're happy at 100, close it. I'm not happy at 100. I want to see how far it can go, because maybe yesterday I lost 60 quid, so that 100 covers my 60 quid and made 40 quid profit over the couple of days. and 40 quid isn't going to pay anyone's wages. So I'm going to want my winners to keep on going. There's no point of closing a winner. Just show your stop loss, and if it goes beyond what your threshold is, and you've locked in that profit. The same, not the same, can be said for losers. Now, it's very tempting that if the market goes like that and you've got your analysis wrong, instead of it being a buy, it could have actually been a sell, and could have kept going down and down and down and down and down. What our human mind wants us to do is it wants to stay in the trade because we think at some point it's going to go up. Now, one thing to learn with spread betting accounts, you are charged interest overnight. Yeah. If you keep your positions overnight when you're a day trader, you will be charged interest from your broker. So it's cheaper to get in and out in the same day, especially for £10 a point. If you're like £100 a point, which is huge, the interest is going to be a bit more, but you're going to see like £1,000 as your winnings instead of 112. It's going to be amplified. So I'd be winning 1,112 now, but my stop loss would have been about 1,000. So I was risking 1,000. Risk reward ratios. Okay, so let's say £112. Okay, now if I'd have put my stop loss at the minimum amount, it might have said minus £100. That's the amount of money I'm risking. It's the amount of money I'm putting on the table that I could potentially lose. I would want to either, I don't want to risk £100 to get £40 back. That's just not good. You're going to lose and not be profitable in the long run if that's how you do it. Okay. Now, there are exceptions to this rule if you're scalping and you know that you're dealing with the small fluctuations, but we'll get into that another time. We don't want to risk £100 to get £40 back. At the very least, we want to risk £100 and at least be able to make £100, which obviously we're okay because we've got our stop loss in there. And I'm probably stopped out by now. Let's check. Yep, stopped out. So £100. I'm no longer in the trade. I've been stopped out, but I might look to get back in this again. I've just watched the price for a bit. I'm going to end this lesson here. I hope you've enjoyed it. Click subscribe if you like the video, and also click the bell and you'll get notifications every time I upload a new video. But this lesson today was kind of a guide as to how I would place a trade and how I kind of manage my money in the trade, and to explain a little bit of theory about why I do what I do, how I'm thinking. I'm not following the crowd, I'm not following the sheep. That's why you're seeing these posts of me making money. This was a live trade. You don't really see many of those, so if you like what you saw, leave comments below, and hopefully see you in the next video.